The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 19th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, that's really what we must master each and every day. So let's go start off by taking a look at some of what I consider to be life's greatest belief systems out there. You know, folks, it's not what we get, but who we become and what we contribute. That, folks, is what gives real meaning to our lives. You see, our beliefs about what we are and what we can be, well, they precisely determine what it is that we will be out there. Be all you can be, folks, and do all you can do. Leave nothing left in that tank. Speaking of tanks, let's go take a look at the markets out here. We've got the Dow up about 49 points right now, trading out at 14,500 and a little bit of change. The S&P trading up $3.60 out at 15.55. NASDAQ up 10 points out at 32.47. Russell 2000 up 3 points out at 950. The NDX 100 up 9 points out at 2801. New York Stock Exchange up 18. You've got the gold here is just slightly positive, really flat up 40 cents. Silver down 2 ticks. Light sweet crude back 14 cents. Natural gas up 3 pennies out there. Copper continues to get smoked, pretty much flat, but it certainly got smoked yesterday. Platinum up 90 cents over in Europe right now. Let's peek in here on the DAX. DAX still doing, trading down about 0.3%, off 24 points out there. Maybe the DAX getting ready for some more turmoil. Certainly there's going to be some turmoil out there because of all of the nonsense going on in Cyprus. And when I mean nonsense, not nonsense about, if you live over there and you've got a bank account over there and you can't access your money and they're just simply trying to steal it. You talk about crooks out there, my goodness. And the FTSE here is up 7 points out there. Our call-in number is 877-927-6648. Would love to hear from you. Let's go take a look at start off looking at the indexes out here. Let's look at the S&P 500. What did it do yesterday? If you're watching us on Tiger TV, you can see my screen. If you're not watching us on Tiger TV, maybe you're just listening on your mobile device at tfnn.mobi. Thank you for doing that. Maybe you're listening on the radio. Thank you for doing that as well. Remember, you can catch the live stream of this by going to the homepage of tfnn.com. Over on that right-hand side, you'll see the button with those 3 smart phone devices. Click on that. You'll be able to see these charts live. And you can always catch the archive of this show on Channel 10 as well. If we take a look at the S&P 500, you'll see a couple of lines going across my screen here. Well, you'll see several lines. We're looking at the ones up here at the top. And one of the key numbers is 1546.72. We all know what that is by now. That is the low of the October 11, 2007 swing point. As long as you trade inside that swing point, what does it want to do? It wants higher price. What's that next level? 1576.09. Yeah, the S&P 500 get above 1546. Do that on March 8th. Closed at 1551. That was also key out there. You then had the S&P stay above that level. Yesterday was actually the first test. The first test when it pulled back into that March 18th level, coming down it got down to as low of 1545. 13 rejected it by closing at 1552. If we get I will say this, if we get 2 more tests of that, if you're bullish or bearish, actually, you want what you're looking for is information. Always looking for information. You test, if you test 1546.72 2 more times and hold, you get 3 tests. It really sets up a very strong support level. And in fact, I'll tell you, if I see 2 more tests here, I would take a intra-period long trade on that. Just have a stop in place and look for the S&P to want to move up to that 1576.09 level. One thing at a time. But that is important. That is what we really want to be paying attention to in the indexes, the S&P 500. Why? Well, because all the other indexes, the Dow, most certainly the Dow here up and above the 2007 level. Now, what the Dow did yesterday, if you're watching this on Tiger TV, some of my charts you'll see a numbering system. I don't necessarily put it on all the charts out here. That numbering system is a system developed by Tom DeMark. And this one here that I'm looking at is the TD combo system. In this case here, it made a level of 13. Level 13 price. When you see that number out there, they identify strong areas of support or resistance. In this case here, Friday's candle made a 13. That says at 14, 539.14 should be very strong resistance. Would you take a trade just based on that? I wouldn't. It's nothing more than an indicator out there. It's like an indicator like the stochastics, like the MACD, like an A to B equals CD, like a 3 drive to the top pattern that failed here inside the Dow Industrials out there, like an expansion of swing points. And that's what we have in the Dow. It's really made a 1.618 expansion of that September 14th level. In fact, we probably should draw that in here. I'm not going to spend the time to do that right at the moment. But it is important to note that the 13 level was hit on a Friday. And why that's important to note is simply if you get a close above Friday, when these levels get broken, they become strong continuation patterns, just like the 1.272 butterfly. You get a close, significantly above whatever that price point is. It says that price wants to move to the next level, just simply elevators out there in the marketplace. So that's important to note on the Dow Industrial chart out here. Right now, trading at 14,501. The number that you need to see a close above for continuation to the upside, 14,539 out there. Let's go take a look at the NDX 100. Then we'll take a look at the New York Stock Exchange. We'll take a look at the Wilshire 5,000 out here. As soon as I can find the NDX is probably there. It's right in front of me. It's dead center, and I couldn't see it. How about that? That always reminds me of the story when, you're asked at the dinner table to go get something and you can't see it. Honey, would you go get the salt? Well, where is it? It's in the cupboard. You go to the cupboard, you look for it. I don't see it. It's right in front of you. I don't see it. You only see what you want to see out here, folks, and that's why when you take a look at charting, when you are doing charting, it doesn't matter whether you're in the trade or not, just come back with a clean slate, shake your mind out, get rid of those webs that might be in there. Maybe they're not webs, but get rid of everything. Come back and redraw the chart. See if you see, in fact, here's the real key, the real easy way to do it whenever you're taking a look at a chart is draw the bullish setup and then draw the bearish setup. If you want to be able to be what I'll call agnostic, and which you should be in being able to read a chart, and you should be willing to change your tune as soon as the chart gives you more information. This is nothing more than just simply reading a book and reading the chapters. And sometimes you read a chapter and you see something you didn't expect. And that's what can happen when you're taking a look at charting as well. Well, in the case of the NDX 100, what we can see is the 0.786 Gartley sell pattern still out there. Been consolidating here, well, really for quite a while. The last consolidation, most recent one, is on the gap up from March 5th. That low was tested yesterday and held. So that low was 27.76.12. Got down below it. Didn't actually fill the gap out here. You don't need to fill the gap. What we know is now the NDX, which had been forming strong support here based on the January 2nd level, now forming support here. And this is an important chart to be paying attention to because should this fail, not only will we see 28.78, which is the 100% move of September 21st, what we will see is we'll see a 1.272 butterfly expansion, and the NDX, that sets up 29.82. Of course, what that would really set up a huge bounce in Apple out there. I see a bounce in Apple. I don't know that I see that huge of a bounce, but that is on the NDX 100. Let's go take a look at the Wilshire 5000. Let's go take a look at that. We've got the weekly chart up on the screen. Yesterday, the summation index ticked down on the Wilshire 5000. So it needs a lower close today. Let's put the daily chart up here on the screen. Actually, doesn't need a total lower close today. Just doesn't need a substantial higher close in order for the summation index to continue to tick down. Why is that important? Well, it's important, folks, because the Wilshire 5000 is truly the larger breadth of the marketplace out here, and that has given us a first indication of a reversal signal. Yesterday's candle moved lower, getting below the March 14th level out here today. Trading out at 16,449. Not a lot of movement here. And again, I don't really expect a lot of movement maybe until yesterday when the media when the market starts to interpret whatever it is that Uncle Ben might say out there. Of course, we know Uncle Ben here is got his helicopter. He's got the Apache helicopters up because he's got to deal with all of the problems being created over in Europe. Super Mario certainly is out there buying the euro, trying to just stabilize the euro, but we'll probably see some runs out there. Going to be some pressure. In any event, let's continue looking at the index. Let's take a look at the Russell 2000. Russell 2000 here, not giving up much of its gains here yesterday, still closing inside that March 14th candle. Now, it did create a three-candle evening star formation out here. So that sets up the Russell 2000 as the next area of resistance, 954 out there. You got that three-candle formation. So all these markets but working in harmony out here. And so in the case of the Russell 2000, you close above 954. It's going to reject that area. And it says what? It says, and the Russell 2000 wants to make a 1 to 1.618. A to B equals CD. That price point, 983. That's up another 30 points out there. That means that, so we've got, the line's been drawn in the sand, so that's pretty cool because you can identify where support and resistance is. It makes it relatively easy to take a trade. Doesn't mean the trade's going to pan out, but it does mean that you have, you're waiting for the proper information in order to make your next move. Is it a short here right now? No, I don't think so. Not just yet. If we take a look at the New York Stock Exchange, also ticking down in the summation index right now, just trading with inside yesterday's bar out here. You have to use a tool that I teach for those folks that have attended my newsletter subscribers, because I've done some of this during my workshops that I do. I do a workshop typically every other week out there where I'm trying to teach different technical tools for you to be able to use in your arsenal out there. And there's also as well, I've done a number of workshops, buying and selling the D point. That's a workshop that you want to take. The candlestick workshop, that's another workshop that you want to take. And speaking of workshops that you need to take, the one you need to take right now, right here, right now, is one that Bud Rolfs is putting on. That is this coming Thursday, March 16th from no, not March 16th. What the heck? We're already into it. That is this coming Thursday. What is the date on that? The 21st. The 21st, 6:30 to 8 p.m. The coming 4 years in the marketplace. If you want to learn how to, let me tell you, you want to learn how to use channel lines. You want to learn how to use primary trading ranges out there. You want to be able to learn from the master. And the easiest way to do it is go to the homepage of tfnn.com. You will be so grateful that you took Bud's class. So do that now. All the details, again, on the homepage of tfnn.com. If you can't be there live, not a problem. No problema here at TFNN, because that show will be archived on your members page. 877-927-6648. Dow's up 48. S&P's up $3.60. It is Terrific Tuesday. Hope you're having a great day so far, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow up 37 right now. S&P up about 2. Composite up $5.60. I have a request here from our man Larry. He wants us to take a look at Eagle Outfitters. EGLE is the ticker symbol. That's what I've got up on my screen here if you're following along on the home game here at TFNN. And as we take a look at the Eagle Outfitters, Larry is in this equity at $1.79. It's trading out right now at $2.86. So congratulations, Larry, on a nice trade out there. He's up about 60% on this. If we take a look at first we'll blow it up and take a look at the current area and see what we can see here. We've got an A to B equals CD. Now, it's completed or very close to completing a 1-to-1 A to B equals CD, $3.11. But your B point on this here happens to be January 4th. That January 4th high, 268, 2.7 million shares. Now, right now, Larry's got that as a support level. I agree that is a support level. And he's got to close somewhere below a stop, I should say, below the 268 level. Now, the B point, which was crossed here a few trading sessions ago, which was on the 15th, was with accelerated volume, but not enough volume to take out the B point, 1.6 million shares versus the 2.6 million shares, so a little bit light. Yesterday's candle, if we take a look at it, it's a bearish Rami, but that's not a reversal signal. So far, no reversal signal. In fact, today's candle here is a bull sash candle. So what this does set up is, can get to the 311, may even get to the bottom of this high volume bar out here. Here's what his target is. It's June 21st out here. So he's headed to June 21st. That low on June 21st is about 365. The high is 447. Now, if we take a look at the following trading session, June 22nd out there, that, folks, is a bearish engulfing, and that's also a little bit of volume off of the top out here. You can see that volume was to the downside. That was on June 22nd, had 2.5 million shares out there. So now what I would really use as far as a potential target on the way up here would really be the low of that June 22nd level, 347. You can see you also have a 1 to 1.272 A to B equals CD up. That finishes at $3.48. Now, the other element that we're taking a look at the daily chart, if you're watching along with us on here at Tiger TV or Inside the Den, one of the things that I did is I went and I notated the times when this equity here has gotten into the overbought range, just to see if there's any kind of, does it continue? Is this a momentum oscillator out here, or is this indicating it gets overbought and it starts to sell off? So the very first time that we're looking at right now goes back to 2012, the January 2012 time frame, gets in overbought territory, does begin to sell off, but just sell off slightly out here. Of course, it made this Thomas DeMark 13 count on this as well on January 27th. Now, what you can see here, you had a little dark cloud cover candle form on January 31st, some additional follow-through out here. No real volume or anything that it was going against, but it went ahead and made a beeline. When you take out these level 13 candles, either to the upside or the downside, they're great because it's really like a continuation pattern. Tells you that the move that was underway has a lot of momentum to it, that the trend, it's great from a trending tool standpoint. It works on all different time frames out here, so it's a really nice tool to be able to use, and certainly enough, that's what, in fact, Eagle did out here, and you can see it moved up. No bearish candles once it really took off from the low here on the 1st and 2nd of February. Moves up, gets into the overbought condition. It does that. It creates another dark cloud cover candle. That here is on the week of February 15th. That is the last significant high out there. That was $9.80. Now, as we take a look at the stock, we come back here. You can see as it gets into the overbought area, the little cluster of candles forming here between September of 2012, September 20th, 21st, 22nd. That was also running into this high volume downdraft area. You can see it was the top of that candle. I had the line drawn on the bottom here. Let's take a look at it. Let's actually draw this in black so we can see the area of resistance on this. I'm going to go ahead and, because what we know that we want to use that high volume bar versus the actual swing point. So we're going to use that high volume bar out here that we're drawing. And so the price point that we're looking at in Eagle is the 404 level down to 347. We can see how that area is held as resistance. You got into the oversold territory. And what it's done right now, folks, it is moving into oversold territory. So my recommendation here to Larry is that the first sign of any kind of bearish candle signals here, I would go ahead and take your profits. You're up by 60%. That's a beautiful thing. If you want to take this for a longer-term trade for some reason, take your profit off take your principal off the table so that you got a nice free trade out there. So a number of ways that you can trade Eagle, E-G-L-E. 877-927-6648. Dow's up 24. S&P just slightly green, up 60 cents. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. The Dow's up 22 right now. Composite just slightly green, up 50 cents. S&P flat here. Russell 2000 up 31 ticks. Apple down $1 right now. You've got Google up 760. Let's take a look in on the ETF structure out here. Let's start by taking a look at the SPYs out here. As we take a look at the SPYs, you got a little, what we're going to call a bear counterattack here on its way. Now, that is the least bearish of all the candlestick patterns that is out here, but we'll see how it actually closes out the trading session. What we can see here in the diamonds, if you're watching us on Tiger TV, number one, you're seeing the 1.618. I'd say the diamonds, the SPYs. My apologies. I'm thinking diamonds, but I'm really looking at the SPY chart. That means we'll look at the diamonds next. If we take a look at the SPYs, we're looking at the 1.618 butterfly expansion. Price traveling with inside that October 11th, 2007 swing point. That price point low, 154.54. and the swing point high 157.52. Boy, I said I was going to write the volume down. I got it written down somewhere. I believe it's about 230 million shares or so. So we're inside this on a light volume out here. Big time. In fact, well, here it is. That's the black line going across my screen. And on February 25th, we did 245 million shares, but February 25th was to the downside out here. That's the type of volume that is at that swing point. And you can see, if you're looking at my chart here, on the bottom right, you can see we're inside that area on lighter volume. Have not rejected that area. In fact, ever since it really got into it, which was the close was here on March the 7th. Yesterday was actually the first test. That was a test of lighter volume to the downside, so it couldn't bust it down. You do have price traveling behind or underneath Basil and Johnny Cash's 9-period EMA as it walks that line. So we'll see if this becomes an area of resistance out here versus the support that it has been. But most importantly to note is the 154.54 level. You get a close back below that, your first area of support is going to be the gap up here from March the 5th. Your next level of support is going to be March 4th, that high, 152.92. But you get a close below the October 11, 2007 swing point. That, in essence, could set up going ahead and taking a short trade. But right now, while price is traveling inside this level, not really a whole lot of information, not enough information, in my opinion, to take a trade either long or short at this stage if you're not in the market. This is time just simply to have your plan to go both long and short, and then be able to execute and be ready to execute when you get that signal. Right now, no signal that I can see out there. That was looking at the SPYs. Now, we got to go take a look at the diamonds, because I was talking about diamonds. And if we take a look at the diamonds, it's got the 1.618 butterfly sell pattern as well. Today's candle, that's certainly not a bearish candle out here. Yesterday, this was down with about 5.5 million shares. But you can see walking the line out there, that 9-period EMA of Basil's. And so what we can see here is the diamonds, let's see if they've actually rejected higher price here. The diamonds, the swing point high is March 14th. The low there is 144.76. So far in the intra-period, it's gotten up to 144.83. So it has gotten up in there. 5.3 million shares on March 14th. So far today, in just over an hour of trading, 1.3 million shares. Volume is not bad here just yet, and not a full reject. We'll take a look at maybe the 10-minute chart here and see what we can see on the true intraday pattern. But the diamonds, boy, what do the diamonds have to do in order to really be short the diamonds? I'd have to say get back inside the range. That would be all the way back down to that October 2007 swing point, because right now the high of that swing point, I don't have it marked here, it's going to be somewhere right around 141.09, and there were 21 million shares up at that level. You're up above it now on lighter volume for sure, but that is going to be the first test is going to be, does it want to get inside back into the lower part of the range, or is it just simply going to be a test and a rejection, and then a move higher as it works off the over-bought condition that it's in? That is on the diamonds. Let's go take a look at the Qs. Let's go see what's going on inside the Qs out here. The Qs yesterday testing an area of support. That area of support was really the gap up. They were looking at March 5th. The low there, 68.08. Yesterday got down to 67.73. Did not actually touch the top of the gap, which was March 4th. That was 67.69. That had 19 million shares. Yesterday, 36 million. That 36 million shares going against 35 million shares. So coming down with some volume into a support area. That area should certainly be tested again. The area here where you're looking at, first area is March 5th. The low is 68.08. And the next area of support level number 2, just below that. If you're bullish, you want to see that level hold. But really, quite frankly, you've got another level of support just underneath it, and that was really set up by that January 2nd area. You get a close below 66.48, not good news. That sets up finally a test of December 31st out there at 65.25. But right now, volume-wise, on the Qs here, 5.4 million shares. Yesterday had 36 million shares, so a little bit lighter volume than we saw in yesterday's trading action. Let's go look at the Russell 2000, the small caps out here. Small caps are really being the strongest as I take a look at either the index, the futures, or the ETF charts out here. Small caps trading out at 94.26 right now. Volume down yesterday was about 36 million shares. So far, it's done 9 million shares. So you get volume. You definitely have volume in the small caps out here. You can see that has held the 9-period exponential moving average. It did yesterday. Maybe that'll be tested again today. The low there would be 93.79 as we speak right now. Let's go peek in on the 10-minute bars here, see if we can see anything. Let's continue on with the theme here of the small caps. Let's refresh my screen, just make sure I've got all live and active data out here. And again, now what we're looking at, folks, is the 10-minute chart for the IWM. Give it a second here to, there we go. Now we've got it refreshed. So trading out here at 94.26. Let's see here. The last volume bar to the downside was 1.6 million shares, and that's coming into this gap down from yesterday that has 2.8 million shares. We'll see if that area will hold. It has not been tested, been close. 94.17 is the level. You get down to 94.17 at 10:40, just as we were actually switching over there. How about that? And it was getting down there with a lighter volume. And if we take a look at the 10-minute chart here, the candle that was formed there was none other than one of your hammer candles. So now on the 10-minute chart, we know where there's a support level because it's been set up both by the bullish candle, which is the hammer candle, as well as the top of a high-volume downdraft bar for sure. That was the open yesterday, and that had 2.8 million shares. So you break the hammer low here on the 10-minute chart. That low, 94.17, says if you're long, you're wrong. And all that means is that what you'll see is you should see a test of that low bar, that high-volume bar out there, which would take you down to 93.67. You got to test that bar on light volume, and maybe all that's doing is setting up a little bit of a consolidation range out there. But you did have a hammer come in at that 10:40 session as we switched over to the chart out there. Let's go peek in on the other ETFs as well. Let's go see what the SPYs are doing right now. The S&P is just slightly positive, about 38 cents out here. The SPYs are actually a little bit stronger than the small. Well, let me refresh this screen too. Let me just make sure that I've got all the active data because I want to make sure I give you accurate information. No reason to go through all this work only to give you the wrong information. So it's taken. There we go. So as we take a look at the SPYs here, that same bar at 940, that gap down yesterday with 11 million shares. So far, the SPYs have not been able to get down. That level is 154.62. If we take a look at the SPY on the 10-minute chart, though, it did not create a hammer candle, but right now it's trying to create this little bullish engulfing. What the SPYs have done here is just simply come back to the gap of this morning. And if we take a look at that, coming into the close, you had 6.6 million shares. You came back down here this morning with 4.4 and then 3.5 at that last 10-minute session, trying to create a little bit of a bullish engulfing candle on the 10-minute chart. That is inside the SPYs. Let's go peek in on the currency world. Let's go see what we've got going on out here. The Great British Pound. Let's talk about hammers. Great British Pound, U.S. dollar currency pair. We've got strong support out here. The strong support being set up by this black horizontal line going across my screen. Yesterday, as we took a look at this, we had a hammer candle come in at one price point of 150.15074 out there. That has now been tested, in essence, twice. It was tested here at 5 a.m. this morning, and then it took off out of that level, and it was tested here coming into 10:30. So that level's been tested. We're seeing bullish response. So this is an area here where we're seeing a consolidation. Now, that consolidation now says if in fact it cannot break this hammer, and even though I'm long the pound, I'd actually wouldn't mind seeing it break that hammer and getting down to the 149.7 level and creating that next Gartley buy pattern out there, and then seeing the bulls come in right around that 149.7, 150 level. You got really nice Fibonacci expansion numbers out here. This needs to be changed just a tad because we had a little bit higher high than the B point that I used when I drew this up early yesterday morning out here, but not that much higher, so it takes you right around that 150 level out there, and you'll still see the 2.618 expansion. But that would be one trade setup. That would be one place to add to a long position. Another would be taking out the consolidation area. The consolidation area looks like right now that really this is setting up here. We'll just put the line across the screen. We'll go ahead and make that a red line. If you get up over this consolidation area, that would set up a equal move, at least an equal move to the upside, as this just simply consolidates sideways. It's not overbought. It's not oversold on the 30-minute chart out here, so maybe the pound here just building some cause. I love the daily chart out here. Now, the next area, the next target is going to be that old support line. That's going to be in about the 152-ish range out there. And then I'll be having to make some decisions as to what to do with the trade. It'll all be dependent upon the candles and the length of the candle, the size of the candle, if and when the Great British Pound gets up to that level out there. If we go take a look at the other currency pairs, let's go take a look at the euro, see what that is doing. Really not having a lot of movement. Maybe Uncle Mario. Well, it was really Uncle Ben. We can't call him Uncle Mario. We'd have to call him Super Mario. Super Mario, I think, out there supporting the euro yesterday, and the euro moving down into what we call support level 1, really set up by that swing point from December 7th. That low is 128.758 out there. Actually, yesterday getting down to 128.809. Not a bullish candle by any stretch of the imagination, and what we can't see is there's significant resistance on the euro, not that much higher. Any run to 131.32 would really be setting up your next sell area. In fact, if you see the euro move up that way, that would be, you'd be looking, and if it holds, you would want to take a look at taking a short position in the euro, at least in my opinion, because that's a consolidation. That's an area of resistance. That's a strong area of resistance out there. Next level of support, if it cracks this 128.758 is going to take you into the 0.618 retracement, 126.785. That is the second level of support. Let's go peek in on the yen here, see what the U.S. dollar, Japanese yen is doing. That is just really traveling sideways. And the yen, not really wanting to give up too much. So it's just a flat market here from yesterday. So nothing going on out there. A peek in on King dollar. We should see not a whole lot of movement here as well. The King trying to take out this 0.786 Gartley sell pattern out here. It's going to need a close convincingly above 83.18 in order to do that. Let's take a look at gold. So we look at Goldilocks. Gold here trying to break out, trying to get above the 1619.70 level, and I believe it will do that. Then it will make its next move to 1647 before climbing Mount Everest and moving up to about the 1704 level. So gold absolutely wants to move higher out here. That is my personal opinion, and that's how I've actually traded it as well. Silver here, not as strong as gold. Silver not being able to really get up above that February 27th body. I'd like to see that 28.25. That doesn't mean I'm not long a silver mining stock. That's doing nicely here, but silver not as strong as gold on the commodity side. Light sweet crude wants higher price, unfortunately. Today just trading sideways out at 93.44. Light sweet crude, 94.84 is its next stop before probably moving up to 96.33 out here. It's been kind of a straight run move off of this Gartley buy pattern that was formed on March the 4th out there. Let's go take a look at bonds, see what bonds are doing. Bonds having some additional confirmation and and moving higher. In fact, so we got bonds moving higher, and bonds want to make a run all the way up to the resistance level, which is the January 2nd high, 144.29 out there. Trading out right now at 143.16. Setting up really a heck of a nice little consolidation run inside bonds out there. Let's go peek in around the globe. Haven't looked at the DAX, so let's go see what the DAX here is doing this morning. As soon as I can find the chart, it's right in front of me to the left. Let me put this on the daily chart as we take a look at the DAX. It is trading down just a bit. Not really giving a whole lot of information out here, trading inside yesterday's bar. 877-927-6648. Dow is the only thing green, up 10 points right now. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Right now, Dow is up 15. Otherwise, everything else red, slightly red. You've got the composite down 3, S&P off 70 cents, small caps down 56 cents. So the number for the day and what to be watching for the day is this, the S&P 500, 1546.72. You get a close below 1546.72 coming into the close. To me, that's a signal that we will continue to see a correction, that a correction has begun. 1546.72, you test it again. 1546.72, close back above it, and no signal there. And I think it's the S&P 500 that is going to be the king here, not king dollar, but is going to be the king to determining whether or not the market wants to move higher, drift higher out there. I would expect between today and tomorrow, likely not to get that reversal signal, not until Uncle Ben comes out into the marketplace. Let's go take a look at some of the top 10 holdings inside the Philadelphia Semiconductor Index out here. Let's start off with TSM. That is Taiwan Semiconductor. Taiwan Semiconductor is the fifth largest holding inside the SOX out there. And what it is doing this morning, it is breaking an area of support. That area of support, now the trading session is not over, so we'll see how this ends the day. But that level of support is the December 31st level. Kind of interesting out here because the semiconductor index has been very strong. You know that when the market does correct, that it is likely to pull all the way back to the January 2nd and December 31st. The more we start to see the underlying stocks do this, how about the fifth largest weighting inside the SOX? Has to make you say, something to think about. In any event, that area here, that window, that area of support is now being repaired and will no longer be an area of support, maybe an area of resistance. That is 1720 until it closes below 1694. Right now, trading at 1708. We'll say it can still act as an area of support out here, but we can see this had a TD combo, 13 count, right up here as it made its high on February 20th. That wasn't really the reason that I picked out this stock chart. I picked it out for other reasons out here. You can see that made a high, created a dark cloud cover candle. And if you were watching in on the early part of the show, you saw the Dow Jones also has made a TD combo 13 count out there. And, this system here developed by Tom DeMark, but was really, really developed for Paul Tudor Jones out there. And so I know that he also uses it, but you also want to use it from a momentum standpoint because when these 13 levels do not hold, it tells you you've got a strong move that is underway. If you come back here on Taiwan Semiconductor and you look back at August 10, 2012, it also made a TD 913 combo count out there. And certainly once price got above that, it just simply continued moving higher. So right now you've got TSM, Taiwan Semiconductor, breaking through a area of support. And then the next level, 1653, is where it will head to. But if there's a correction going on, Sweet 618 is where we'll head to, about $14.86 out there. Let's go take a look at the number one holding inside the semiconductors. That's going to be Intel, INTC. Is the ticker symbol right now, just trading sideways at $21.24. We'll see if the January 2nd bottom can hold, but really it's already given way, so that quite frankly is not an area of support any longer to be able to use. So right now, if we take a look at the retracement, because we had a bearish engulfing candle that formed right up here on March the 8th, let's take a look at the retracement that it's done. So it's below 0.382. This says to me that Intel wants to trade back to $20.84. A little of an ABC out here that has formed. There's your A to B point and your C to D. So 1-to-1 is at 2109, but the 1 to 1.272 sets up a Gartley buy at about 2084. Stay tuned, folks. Basil Chapman will be up next. Then we do the option hour on Tuesday. After that, we go up to Daryl Martin. Over to Daryl Martin, David White, Ken Shreve from 3 to 4, and the Tom O'Brien Show 4 to 6. Have a fantastic, terrific Tuesday, folks. See you in the morning.